Well, hi, ArcisFX community. This is just a quick video, really, just to give you an idea of what I'm thinking on the currencies that we're in and some of them that we're not in. And let's start with the euro. This is the euro day chart. And you can see we're still moving down. What's interesting about this chart is that we broke beneath the support level here and bounced back up through it. It's a very important level, this, at 1.0660. And yesterday we broke below it and held below it, so that's a good sign for euro shorts. And I continue to think that the euro is likely to move down to 1.05 or 1.0520, and that's our trading target. So I can just pull this one down to illustrate that. So that's at the bottom of the bodies of these candles over here. So that's euro. That's my target for euro 1.0520, after which we might see a recovery in the euro and a move back up at least to the underside of this previous channel line and maybe one of these Fibonacci levels. So we'll have to see. We've got the fib drawn in there so we can see where, if we do get down to 1.0520, this Fibonacci will move down and you can see where the new fib levels will be up above us. And you can just pause the video to look at those numbers. So we've got the 38, the 50, 618 and 786. I think we'll probably get back up to 1.08 if we get down to 0520. Then we can expect to bounce back up to this region here, or maybe one of these moving averages. So that's something to look out for. In the meantime, I'm going to leave that one there as it is at the moment. So we need to really hold beneath this level at 1.0660 today, ideally anyway, for a continuation of this move down. We do have a spike low below support, but that was kind of negated by yesterday's bearish candle. So let's see how that goes. We're short on the euro, as you know. The pound, same sort of thing. I think we're going to look at the dollar index, really. So the same thing applies to all the major currencies. If you look at the dollar index, still looking quite firm. And again, similar to the euro, we've got support just beneath us. I'm going to draw that line in. And we want to hold above this horizontal area here, just beneath us. And that's the support area you can see going back to this period here. You could draw it a little bit lower. Let's just use the bodies of those candles. Somewhere around 103.50. Let's call it 103.50. We want the dollar index to hold above there, and it has done so far for the last 4 or 5 days. So we're still waiting for the dollar index to move higher, and the first target is here at 105. That's that previous resistance level. So there we go, 105, first target for the dollar index if we manage to rally up. It looks pretty constructive. We did have a spike high a few days ago, but it's just moving up. And then potentially 106. Again, keep on mixing up. I think 106 is a better level than 105, but somewhere between 105 and 106. And then I'd expect the dollar index to move lower. And with that happening, we'll see the euro and the pound and the Australian dollar, etc., moving lower as well in conjunction with the dollar index. So those are the areas to watch. As soon as we hit 105, 106, we need to be careful about euro and pound shorts, and we'll start to look at opportunities to reverse those into long positions. So that's the idea on the majors. And Euro CAD, I think the Euro CAD and the pound CAD, Aussie CAD will all follow suit. We've seen some weakness in the Australian dollar. We did take some profit on Aussie dollar yesterday, so we're not in that at the moment, I don't think. Maybe we've got one position left on the Aussie. I'll have to just have a look at that. But we took some profit on that, and that's moving lower. And then we could look for a target of 0.67 on the Aussie, if you like trading the Australian dollar. So we've got natural support down there, and actually if we have a look at the better support, it's probably around 0.6680, I would say, for the Aussie dollar. We're at 0.6830 right now. So a little bit of room to move lower, and that would give us, that would be really in conjunction with the dollar index moving up to its resistance level. So I think all of these things will be in sync. As soon as we get up to 105, 106 on the dollar index, we should start to see some bottoming across the majors, and that's what we're looking for. And then the only one we're trading on the yen pairs is the Australian dollar yen, and this pattern's been fantastic for us. We keep on shorting the Aussie dollar against the yen. We're short again now, and we're looking for a move back down to the bottom of this channel line, And we still want to complete this sort of now very jagged crowning pattern, but we've got a target way down here somewhere. But the first target will be around about 88, 87. Got to get through this channel bottom and expect a bit more bouncing around there, I suppose. All depends on how the dollar yen does. And we're seeing some weakness in the dollar yen. Not really convincing for a short. I'm looking to short the dollar yen up into some higher areas, so we might get a bit of a rally. I'd still like to form this head and shoulders pattern on the dollar yen. This channel that we've broken out to is now no longer valid, but it may retest the bottom side of this downward sloping channel line before moving up into somewhere around 136, 137, 138, which is where some decent size could be put on short positions on the dollar yen. So depending on how this behaves against the dollar, the yen against the dollar, that'll affect how the Australian dollar behaves against the yen. So we'll keep a close eye on those. It may be that we don't get any higher on the dollar yen. It may be that this is the top. So we'll have to see how that looks as time goes on. But no matter what, I think we won't see much strength in the dollar yen. I think we'll start maybe some rallies up here. But overall, I think we're going to see increasing weakness in the dollar yen, and that's going to assist our Aussie yen trade. And I'm not in the euro or the CAD against the yen. This trade's looking rather good. So first target is down here at 90.7, and then if we can eventually break through this rising channel line, we should then get down to this green line, which is the top of the descending. Let me just zoom into that again. I will open it up. That's the top of this descending. Hang on, I've got the dollar yen. Excuse me. There's that downward sloping, very long-term trend line. And we should try and test the top side of that trend line. And if that happens in the next number of days, that'll be down at around 88, 89, 90. Probably 88 or 89 before we see any significant bounce in the Aussie yen. So this is my, as always, and has been for, well, most of this year so far, my favorite short trade. And we've banked multiple profits on this one over and over again, and we're in profit yet again. So I'm not being blasé about it, and anything can happen, of course, in markets. Now, NASDAQ and S&P. Well, we were short on NASDAQ and S&P. We missed out on yesterday's move. I wasn't sure what was going to happen. We had some, I took some short positions, which we held from near the top here, but I got out yesterday, and we didn't manage to take advantage of the 2-point-something% move down on both NASDAQ and S&P. And I don't think it's worth looking to short these today because we're at pretty key levels, pretty key support levels. And this is really pretty much a deciding point at 12,000 on the NASDAQ, big round number. And we've got all these moving averages below us, previous resistance. And it's also, once again, we're back to that division between bullish and bearish. Where is this market going? I think in general, down, but many traders thinking that have been proven wrong throughout this entire rally of 20-odd% this year. So we have to be very careful with making bold statements about the bearish nature of the US stock markets. And same with S&P. We're down to 4,000, the big number. So we've got 12,000 on NASDAQ, 4,000 on S&P. And again, we've got all these moving averages, and we've got this downward descending trend line just below us. So I think possibly we'll get a move down to maybe 3960. This one, if anything, looks a bit more safe to trade on the short side, down to about 3950, 3960, maybe 3980 before an attempt back up to the underside of this rising trend line. So very choppy. And actually, if you look at where we've been in stocks for really about a year now, believe it or not quite a year, but roughly approaching a year, we've been moving sideways. And after the beginning of a bearish trend in stock markets, this sideways movement doesn't bode well for the bullish call on stocks. We would have probably seen a sharper rally off the lows, but we haven't seen that. We've just been moving across the page, and now with a little bit of weakness coming in yesterday, it looks like we might need to go down. If we do need to move down on S&P and NASDAQ, we could go quite a lot further and make potentially even lower lows this year compared to last year. And I'm thinking 3,200 on S&P to start with. So we're at 4,000 now. So it's quite a long way down. So really, really difficult. If you're trading these indices, I would say I would advise trading on a daily basis. Just look at yesterday's candle, look at the week's candle, look at the major levels, and it's sometimes easier just to scalp or at least day trade off key levels. We're at one now. We might get a little bit of a bounce. If I was trading this today on S&P, I'd be looking for a little bit of bounce up into 40.20, 40.30, then for a move down later in the day to 39.60, 39.80, 39.50 maybe, before another bounce. So that's the way I would trade it if I was day trading it, but I'm not. I've got bigger fish to fry right now on currencies and on commodities. So let's have a look at those. Gold and silver, I don't know really. I think we could get down a wee bit lower. But if I was going to take a trade on gold and silver, I'd be going long. I'm not too sure about those, and I think we're going to have to wait to see how the dollar index reacts today and during this week, and where that closes this week. The dollar strengthens a little bit more this week, we could see gold and silver moving down. If the gold doesn't find extra strength and doesn't move higher, begins to collapse down a bit again, we should see gold and silver moving up. So I'm going to keep an eye on the dollar index rather than anything else. And then the big elephant in the room is natural gas. We're down at 1.97 now. Abandoned baby pattern didn't work. You can't see it so much on this symbol, but if you look at UNG, for example, you can see where this potential abandoned baby may have formed. That was this candle, where we got the gap down, formed this opening candle, much lower than the previous one. UNG tends to have a lot of gaps. We could look at Henry Hub on the NYMEX, and we saw that little gap there. There's that gap. Then we got to move down and now move down. So that abandoned baby pattern didn't form. And please, I've left some notes on the previous comment in the comment section on natural gas. If you are trading natural gas, I've repeatedly said in the videos that I put out that you need to be really careful of this. There is potential for this to move down to 1.8 and potentially even lower. And every time we trade this, make sure that you're trading with risk levels determined in advance and your risk protection measures in place. So right now, there's no cause or reason to be buying natural gas. If you're still long in your position, you may as well just hold it, I guess, as long as you can withstand the risk, as long as it fits within your plan, as long as you're not risking too much of your account and you understand exactly what you're doing in terms of risk. But if you're looking to enter into this trade now is not the time. There is no signal to buy this at all. As I said, we could get down to 1.8 for a start. So we'll be watching this very carefully and watching for reversal patterns. As soon as I find that there's a cause or a reason or a signal to go long on natural gas, then I'll definitely put up a video on that. So that's natural gas. And then all the rest, basically I'm looking to short soya and sugar. I've got a small soya short position already, but whether that's going to break this trend line soya, if you're trading soya, not many people do. We've got this rising trend line. It's a pretty simple setup. We want to see a topping out procedure going on here. This is the area that I'd like to be selling into on soya. That's the right-hand side. You can't see it on this chart, but that's the right-hand side of a larger head and shoulders pattern up here. But we might not get up there, and we've got a resistance level at this green line at 1560, and the positions on the COT report are already switching to short on soya, so we might not get the opportunity to sell higher up at around 1,600. But if you don't, there are potential opportunities to sell this on a break and a close and a retest of this rising trend line for a move down, and the first target would be around about here at about 1350. So that's soya. And sugar, I think sugar will just gradually move lower. I'm short on sugar, but not a big position, and I'm looking for sugar to move down back into this sort of mid-range at around, I don't know, $18, $19. We're at 21 and a half now, 21.3. So that's sugar. So really that's it. We're watching to see what happens with the dollar index and the major currencies. That will determine what happens with, will at least be very strongly related to stocks. S&P, I've told you what you could be doing if you're day trading. Look for a little bounce, perhaps up to 40.30, and then down to 36.80, and then back up again, perhaps. I don't know, it's tricky. And then the other one that we're very happy with is this short on Australian dollar, Japanese yen.